What's going on, guys? This is Diamond Trades from Kane Capital, and today we're going to be covering the ICT Breaker setup. The ICT Breaker setup is one of my favorite setups from the 2022 mentorship. If you're unfamiliar with ICT or ICT trading concepts, make sure to check out his YouTube page at the Inner Circle Trader on YouTube, where he covers this setup and many others in much greater detail. So in this video, I'm going to be showing you an example of both the bullish and bearish breaker setups, as well as a live trade that we took using the bullish breaker setup on Friday. That returned about 50% at our target and ultimately ran about 140% into the end of the day. Let's dive right into it. All right, so a lot of you guys who are familiar with the breaker blocks will understand both the bullish and bearish ICT breaker setup. So for the bullish, you're going to have this low, your high, your lower low, and your higher high. This is where you start to look for your entry. You're going to look for your last up close candle in this low to high series, and you're going to mark that out as your breaker block. You're going to wait for price to return to your breaker block, where you're going to find an entry, and then you will ride price higher. Conversely, for the ICT bearish breaker block, you're going to have a high, a low, a higher high, a lower low. So this is where, okay, I have my bearish breaker. I'm going to look for my last down close candle in this series. I'm going to highlight that and drag it over as my bearish breaker, wait for price to return to my breaker block, where I'll have my short entry and ride price lower. Now, here are three things that ICT himself likes to use to ensure that he's taking high probability trades with both his bullish and bearish breaker. Let's start with the bullish breaker. So here's that standard bullish breaker setup, and here's the first of the three things that you want to look for is a draw on liquidity above the market, an area where the market wants to go, particularly to take out buy stops, right? So the market is looking for that buy side liquidity above the market. If you have that, you have a target at which you can expect the market to want to draw to, which is going to increase the probability that you're going to take a winning trade. All right, so that's step number one, this draw on liquidity. You want to make sure that you have an area or a target where the market is going to draw. ICT always talks about his relative equal highs. Ideally, if you can get relative equal highs above the market that the market may want to draw to. Let's say you had a price run higher, came up to this level, came up to this level again and rejected it. That is where you would expect the market to draw, right? So this would be your draw on liquidity for the market, these relative equal highs, an area above the market that has sell stops that the market is going to want to draw to for buy side liquidity. Okay, so your relative equal highs is just one example. It doesn't have to necessarily be relative equal highs, but some form of buy side liquidity above the market that's going to draw on price. Okay, so that's step number one. Step number two, the second thing that you want to have in this setup is some sort of stop hunt, right? So this in and of itself, this low, high, lower, low, higher, high action, when we break this low, that is going to be a stop hunt. But in my opinion, when you have an additional higher time frame level that you can use for sell side liquidity, you're going to increase the probability of this breaker block. So what do I mean? Let's say that you had a higher time frame low around this level right here. So that first run lower failed to take out your sell side liquidity and you get a small bounce. This second run lower takes out your sell side liquidity, particularly, like I said, on a higher time frame, right? And that's where you get your bounce into the breaker. I found that when you have this higher time frame sell side liquidity, you can increase the probability of your bullish breaker playing out and add a bit more conviction on the setup. Additionally, the last thing that you want to look for, once you've got your draw on liquidity and your sell side, you've got your breaker block formation, you want to go into this price run, so the lower low and the higher high price run, and look for a fair value gap inside of the breaker block, okay? So an example would be, let's say on this price run higher, we created a small fair value gap right here. Now, when you have your fair value gap inside of the breaker block, it sort of minimizes your entry spot, right? So you're looking for a specific area on the chart inside of the breaker block. I know you have your breaker block as your entry, but you can actually refine your entry space by looking for a fair value gap inside of your breaker block, particularly one where you take out the highs. So here's a great example, fair value gap. Inside of the breaker block, price returns to the fair value gap and then moves higher to take out this buy side liquidity above the market. So with these three things, your drawn liquidity, your sell side liquidity taken out at the lows of the breaker block, and then your fair value gap inside of your breaker block will all help to increase the probability that your bullish breaker is going to play out. Okay, so we're back with the bearish breaker now, and I've saved us some time by drawing in some of the elements, again, that you would want to see. Again, the first one is going to be that draw on liquidity. So here's going to be your relative equal lows, or another area of sell side liquidity that the market is going to want to go to take out sell stops, right? So below these relative equal lows, you're going to have sell stops, and the market is going to be drawn to those. right? So this is level number one, an area below the market that the market wants to draw to. So that's your drawn liquidity. Secondly, buy side liquidity where you have your higher high in the breaker block. So again, this could be a higher time frame level of buy side liquidity, or it could be the same thing, right? Your relative equal highs up here that just got taken out. You're looking for a reversal. How do I know I'm going to get one? Let me see if a bearish breaker sort of sets up. And then the last thing, again, now that you know that you have your bearish breaker, you have your high, low, higher, high, lower, low formation here, and you're looking for a return to the breaker block to get short. Where inside of the breaker block do I want to get short? Again, you want to use your fair value gap here as a really nice entry spot within the breaker block to sort of refine your entry space. You would take your short entry inside of the fair value gap, and then again, targeting this drawn liquidity below the market. For both the bullish and bearish breaker ICT setups here, the stop loss for me is usually when we get out of the fair value gap that's inside of the breaker block. Okay, so for the bullish example, if I see my breaker and I'm going to add inside of this fair value gap, if I see us start to fail to respect this fair value gap, right? So we start to trade much lower than the fair value gap. That for me is usually going to be my stop loss. If you want to have like a wider stop loss, I guess theoretically you could use this lower low or this low here. Personally, that's a bit too wide for me, especially since usually the breaker block is not going to be in optimal trade entry range, right? Between your 618 and 79 fibs of the price run. And so personally, I like to take my entry inside of the fair value gap. If we start to lose this fair value gap or close outside of it on whatever time frame I'm on, that will be my stop loss. Again, same thing for the bearish breaker, right? So I'm going to take my short entry inside of the fair value gap, whatever time frame I'm on. If we get a close outside of the breaker, a close outside of the fair value gap, that's telling me that maybe my analysis on price was incorrect. And so it is time to get out of the position. I'm wrong. And so, mark it up as a loss. So if we start to trade higher, close outside of the fair value gap, outside of the breaker block, that's generally going to be my stop. Again, you could use this higher high as well if you really just want to be pretty risk on, but personally, that's just too far of a stop for me. The risk reward doesn't make sense. So I like to keep it pretty tight in terms of stop losses. Okay, so now we're going to use the replay function from TradingView to show an example of a bullish breaker that I actually traded this past Friday on the 27th and show you exactly what I was seeing. And so this was, again, a bullish breaker. And one of the things I talked about, right, you want to see your draw on liquidity above the market. And so right now we've got relative equal highs. I noted these as a draw on liquidity. I know that the market wants to take out the buy stops above this level. So I'm going to make sure to mark this out as buy side liquidity / relative equal highs. Additionally, we've got an area below the market where we have sell stops resting, which is going to be right here. That's going to be my sell side liquidity. So I'm looking for a breaker setup to form after that level gets taken out. So let's go ahead and draw that in as my sell side liquidity. Okay, so I've got my buy side liquidity and my sell side liquidity. Now I'm looking for a breaker to form. Let's see how this plays out. Okay, so my sell side liquidity has been taken. I'm looking for the market to react strongly off of this level and create our bullish breaker setup. Let's keep watching. Okay, so now we've got all three things that we're looking for, right? We've got our buy side liquidity. We've got our sell side liquidity taken right below this low. Market reacts strongly, creates a higher high than this high, right? So we're going to have, again, that low, high, lower, low, higher, high structure. We can go ahead and draw that in. Additionally, your breaker block, again, is going to be the last up close candle in this first price run, this low to high price run, right? So if we look in this price run, last up close candle is going to be right here. I'm going to mark that out as my bullish breaker. Okay, so again, we have our buy side liquidity, sell side liquidity, bullish breaker setup. Now we talked about what you want to see inside of that bullish breaker. And again, you want that to be a fair value gap. So I'm going to go inside of this bullish breaker. Where do I see fair value gaps? I've got actually two in this example. So I've got one right here. This candle's high and this candle's low, don't overlap. You have a gap in the middle, fair value gap creation there. And then you've additionally got one more fair value gap right here. So in a situation like this where I have two fair value gaps, I will often just add the first one and I will leave room in my stop loss plan for this second one to get filled. Okay. So once we return into the fair value gap here, that's where I'm going to take my first ad. And that's where I did take my first ad on some SPY calls, and leaving room for price to come down into this lower fair value gap. My stop in this example would have been if price had come down and really started to move below this lower fair value gap, close below this fair value gap outside of the breaker, that tells me that my price analysis is wrong and maybe we're not actually going to reach up for this 40.95 level on the chart. So let's continue watching how this one played out. So for me, this is where I took my ad, was in that move right there, right into the fair value gap. I know that we weren't necessarily in the breaker, but I said, you know what? If we come down a little bit more, maybe I can add a little bit more of my position. I only had a little bit of risk on, and I was expecting them to run it up into this 40.95 level fairly quickly. So I was okay with these ads. Again, leaving room for not only this first fair value gap to get filled, but also this lower one. I said, okay, I know that there's a possibility that we could trade down to here. So if we do, I'm not going to freak out. I know that that's part of the plan. I'll be okay. Let's continue watching price. Again, price has come down not only into this first fair value gap inside of the breaker, but also into this second fair value gap inside of the breaker. As I was watching this price run, I said to myself, okay, we're in this second fair value gap. We're at the low of the breaker. If we trade lower and close below here, I was wrong and I will sell my calls at a loss. At this point, I was down maybe 10% in the calls. As you can see though, as price continues, we really got a perfect delivery here off of the bottom of the bullish breaker, held this fair value gap as support, and price began to react, reaching again for our buy side liquidity level above the market at 40.95. Okay, so I'm watching this price deliver. I'm watching the fair value gap get filled and respect as support. The breaker block respects as support. This is giving me conviction. Okay, my trade idea was right, and we're likely to reach up for this 40.95. That's where I will take some profits on the trade. Price one more time returns down to the fair value gap before again reaching up and taking our 40.95 level, where I scaled most of my position and held a little bit of the position left for it to see if we could push higher towards the end of the day, which we eventually did. Okay, and so again, the trade was low, high, lower, low, higher, high. That's your bullish breaker formation. But not only that, right? You also have your draw on liquidity above the market and your relative equal highs up here at 40.95. You also have your sell side taken on this move lower, right? And then you also, after you get your breaker block formation, you have fair value gaps created. Actually, two in this example, you have two fair value gaps created inside of your breaker block where you're going to look to take your ads. And as you can see, price comes down, so uses the breaker block as almost like a launching pad into this 40.95 level, this draw on liquidity above the market. All right, guys, that's going to wrap up today's video. If you enjoyed, make sure to like and subscribe to the Kane Capital YouTube channel. Also visit kane-capital.com to join our Discord, where we'll have additional education and live trade alerts every single day of the week. Take care, and I'll catch you guys next time.